Hey everybody, Joe Schulteis, Allied Realty Group here. Just stopping back in to do another quick video for you to help explain the different types of loans or loans out there. In this video, it's not going to be too long. I'm not going to go too far in depth into the loan process. If you have any questions, feel free to reach out to me. I can always shoot you over to one of the lenders that I do work closely with, and they can always answer some questions for you about exactly how to get pre-approved for them, or if you are able to even get them at all. But today, going to talk about a couple different types of the loan programs out there. The two different main categories of loans out there right now are going to be a conventional loan and then a government-backed loan. They go a little bit more in depth after that. First, we're going to go over just the conventional mortgages out there. What a government or a conventional mortgage is it's a mortgage that is not backed by the federal government. So they have their own little guidelines that are set forth by the lenders. Usually in this case, because they're not being backed by the government, they are going to be a little bit harder to get. But not only that, you're going to have a better credit score, so or better debt to income ratio, a couple other things as well. But if you are above and beyond like a 740, then you're probably going to be able to get the best mortgage rate, because then you have a really good credit score for most individuals out there. So that's kind of the idea behind a conventional mortgage. Now, most people, when they hear of conventional mortgages, they think of, oh, I need 20% down to get this mortgage. Well, things have been changing recently with that. I actually had one of the agents that I worked with recently. They asked me about, because I had a conventional mortgage on one of the properties that I just recently sold, and they asked about it because my buyer, they didn't have to put down 15 or 20% on their mortgage, and it was a conventional mortgage. They actually had a 3% down mortgage. The good and bad about doing just a 3% down mortgage is you don't have to bring as much to the table to close, but B, you are going to have private mortgage insurance, which is not insurance for you, but insurance for the mortgage company to ensure that you do pay. So if you would get foreclosed on, the company does have insurance on you, and you do pay for that. Typically, it's about $75 per $100,000 lended to. So if you have a $100,000 mortgage, you're probably going to be paying about $75 a month for private mortgage insurance. Private mortgage insurance is something that is on both government-backed loans and most any loans that you are going to get that are less, or that have less than 15% down. So that's kind of the idea behind the 3% down mortgage, conventional mortgage. They also, with a conventional mortgage in Wisconsin, we also have what is known as a WIDA loan. What WIDA I just want to make sure that I say exactly, is the Wisconsin Housing and Economic Development Authority. What this is they have programs, again, for a 3% down mortgage, but also they do have some individuals will qualify for a 0% down mortgage on a WIDA loan, which is technically going to still be a conventional loan. But in this situation, it is being backed by the Wisconsin Housing and Economic Development Authority. So that's where they get WIDA for. Now, WIDA is a 30-year fixed mortgage to low and moderate income home buyers. So not everybody will be able to qualify for this program. It would be something that you would want to talk to your lender about. Again, if you need a lender to talk to, let me know. I can help you out with that. But this is just a great program to have for those individuals who are trying to get around purchasing a home that may not qualify for the government loan types, or if they're looking at like a condo living. Most condos can't or won't pass FHA or USDA backing. But again, we'll get into that in just a minute. But so again, when looking at conventional mortgages, there are a couple different mortgages out there for that. I mean, you can typically get a 30-year mortgage, which is the most popular for most individuals, or with a conventional mortgage, usually you can get either a 15-year mortgage or even a 20-year mortgage. I've seen them as low as 10 as well. The shorter the time frame, you actually will get a little bit better of a rate as well, but your payments are going to be a little bit higher. Now jumping back over to the or the government backed mortgages. This is what we're seeing more and more these days. A lot of uh, a lot of the mortgages out there. I believe the last time I saw statistics, it was about 73% of the mortgages out there right now are government backed mortgages. So a couple different types of government-backed mortgages out there are going to be the VA loans, which are the Veteran Affairs. So if you are a veteran, you may qualify for a VA loan. What the best part about the VA loan is they actually don't have any PMI on that mortgage at all. So even though you do qualify for a zero down payment or a minimal down payment with a VA loan, you don't have to get hit with those or the private mortgage insurance that we just talked about previously. Another, yeah, a government-backed loan that we do have, and we're seeing a little bit more and more right now, is an FHA mortgage. What FHA is it is a 3.5% down mortgage. Usually, we're seeing about a 30-year mortgage on this one. Again, because it is backed by the government, they do have a little bit more stingent, or they're a little bit more picky when it comes down to them. Same with the VA and also USDA. So I guess the other one we'll talk about, with FHA, again, that one's going to be a 3.5% down mortgage, and then the last one is going to be USDA. So what the USDA is most people think of USDA and think, well, that's going to be the Department of Agriculture. Well, yes, you are 100% right. But just because it is being funded by the Department or United States Department of Agriculture does not mean that you have to be buying farmland or anything like that. What that is realistically, it has to be designated in rural areas. So you have to have you have to be looking for a home in specific areas that are going to be for I believe it's 15,000 population or less. So if you're looking in Milwaukee, you're not going to be able to go USDA. Believe it or not, even in Germantown in Washington County, West Bend, or Hartford, I believe Richfield as well. So I mean, just in Washington County, those four you wouldn't be able to qualify for a USDA mortgage. If you jump on over to Beaver Dam in Dodge County, you can't do it there either. So I mean, those are places that you wouldn't be able to do USDA. But if you are going into the smaller communities, you may be able to qualify for them. Again, what this loan is it is for a first time home buyer, and it's repeat buyers can use it as well, but they can't have multiple mortgages on it. But with the USDA loan, it is 100% financed, so you could have a 0% down mortgage, which again, some people out there really do need. You can get, but this one is based on income, so you can only be at or below 115% of the area median income. So in order to qualify for the USDA loan, you would have to look at whatever county you're looking in to make sure that city, that there is funding still available for it, but B, also to see what the area median income is, and your lender will be able to help you out with that, just to be able to give you an idea of if you would be able to qualify for it, or if your income's a little bit too high. They do have a couple other options as well for lending, but those are the only ones that I'm going to be really talking about today, because those, when looking at the bulk of them, those are going to be the bulk of most of the buyers out there. And there are a lot of different investments ways to do it as well. There are adjustable rate mortgages. if you are buying a home, make sure that you understand adjustable rate mortgages. I'm not, like I said, I'm not going to go into them. They were what did hurt us in when the housing market crashed in 6 to 8, and then running all the way up until 15. But again, we have turned around from there. There are a lot, or they are a little bit more stingent, or they are a little bit harder to push onto people. But again, if you have any questions about any of the financing portion of buying a home, please reach out to me. I'd love to give you a couple names of qualified lenders that I do work closely with, and they can always answer any questions you have. Get you pre-qualified so that way we can jump out there and start taking a look at homes and purchasing your first home or your second home. If you have any questions, feel free to reach out to me either on Facebook, send me a direct message, either at Joe Schulteis or Joe Schulteis Allied Realty Group, or you can feel free to give me a call or shoot me a text. Telephone number is 262-224-0092. Again, Joe Schulteis Allied Realty Group. I appreciate you taking some time to watch the video, and we'll talk to you soon. All right, have a great day. All right, bye.